And now, please welcome Jane Fraser, the CEO of U.S. Consumer and Commercial Banking at Citi.
Hello. Thank you very much for the welcome, and thank you very much for inviting me to speak today. Wow. We have the chance to make it easier for people to do what they want to do, to buy things, to experience things, to turn managing finance from a chore to something that's easy and perhaps even interesting, and to make financial education come alive, become engaging. And we have to do so responsibly, safely, and soundly. And we have this opportunity because we are finally seeing the convergence of technology and consumer behavior gaining critical mass in the States. Now, if you think retail banking, it conjures up a rather fuddy-duddy image for most people, because most people rarely go into a branch, except maybe into the ATM once a week. They probably think of an image of an old-fashioned building, quaint almost in the adherence to slow pace, unchanging daily rhythms, safe and secure. But that world is at the beginning of a seismic change. It isn't happening overnight, but it is happening, and it will happen fastest in the cities. Now, we at Citi are America's fourth largest retail bank, but we're essentially an urban bank, with our presence now focused in 7 of the most vibrant cities in the US. The last few years, we have spent systematically shrinking our bricks and mortar presence to the right locations in the markets we want to win in. And unlike our competitors, we're largely now done with that. And so we can firmly focus on looking forward and the transformation that that entails. So we're beginning to test an entirely new operating model for retail banking in our US markets, one that will change rapidly how our clients bank, and it's going to continue to change and evolve in the future. What could a modern, relevant, fresh approach to retail banking, not just payments, look like? Well, to answer that, let's briefly look abroad. Citi is a very global bank. We operate in well over 100 countries, many of them for more than a century. And prior to the crisis, we used to grow in retail banking by acquiring large national successful emerging market banks. Well, regulation makes that a challenge these days, but we no longer need to, because with rapid urbanization, together with technological advance, this has enabled us to change our focus from thinking around countries into thinking about networks of cities now. And there are 100 cities around the world that form the most critical hubs in our network. And we're focused on becoming or remaining a top 5 player in each of those for our target clients. Now, in the last 5 years, our sizable Asian retail bank has seen the most innovation. Unsurprising when the region has been growing like gangbusters and advancement is all around. A huge shift of population to the cities, unprecedented. Growth of the emerging market middle class, and a vibrant young population in most of these markets. And this has been a fabulous environment for leapfrogging bricks and mortar and enjoying the adoption of new approaches to retail banking. Not that dissimilar to the rapid spread of cell phone networks in the emerging markets that just completely bypassed the wired world. Well, in the last 5 years, amidst the fads, flops, and fantasies, what has endured are 2 fundamental changes to our Asian model. The first is the transformation of the physical network to a far more relevant urban presence. And the second is a model that operates truly seamlessly across channels, a smartphone, ATM, advisors, call centers, branches, you name it. And in the US, we're going to beg, borrow, and steal from Asia and adapt this model to the US market. So let's take, for instance, the notion of a branch. For 100 years, the concept of a branch really hasn't changed that much. The tools behind the counter have changed, of course, but the experience of being a client who walks into a branch to cash a check is scarily and remarkably similar to what it was almost a century ago. How branches are used and where and when they're needed is changing. Doesn't mean the branch network is dead. But it does mean that instead of operating outdated, one-size-fits-all traditional branches throughout a market, we are beginning to create a hub and spoke network with a variety of many smaller branch sizes and capabilities, ranging from fabulous flagships in iconic locations to advisor-only centers, excuse me a second, compact teleless branches, and even little mini stores, all equipped with advanced technology to ease and to personalize meeting the sales and service needs of the client. And next year, we begin testing what we call the smart banking concept. This is something that we developed in Asia, and we're going to roll out into our branches in Miami, New York, and LA to start with. We'll learn how to adapt this model to the US, because it's much easier to do this in Asia, where you can shop and you can go to restaurants, but there isn't so much else to do. Whereas in a US city, it's very different. So we need to learn from our clients and staff and watch how their behavior changes over time, with the goal of ultimately implementing smart banking in each of our top US markets. So smart banking sounds good, but what does it really mean? In a physical location, it means using digital technology throughout the space, so media walls where a client can explore products and services independently or with the support of a banker, workbenches as well as private spaces where clients are going to be able to collaborate with their bankers discussing their needs. It means opening new accounts instantly with multiple forms of authentication possible: voice, fingerprints, eyes, digital vaults to store documents, more secure verifications, displaying alternative financial plans visually and beautifully rather than those hideous statements that clients usually get. The list goes on. The world's going to become much more interesting. But these are great tools, but they're only going to change retail banking when the client's experience changes. So we also have to think about the way that the staff who work there, and we have to think about what they need to change and what changes we need to the service model. So in our compact branches, for example, we're testing a new role known as a smart banker that combines the traditional role of a banker and a teller. Smart bankers are able to meet all of the client's needs, whether it's sales or service. In most instances, the person who greets the client will be able to handle transactions, explore the client's needs, open accounts, educate the client on digital servicing. And the supporting processes will eventually be automated and largely paperless. Now, this is a very different world from what exists in anyone's branches today. We've pioneered the model abroad in the last 5 years in places like Singapore, Hong Kong, and Warsaw. And in each city, we saw client satisfaction, the speed of in-branch servicing, our market share, sales, brand recognition, all increased meaningfully. But most surprisingly to us, so did the number of customers coming into our branches, who increased by a lot. But automation can also go too far. When you go into some of the competitor branches abroad that are completely tech-enabled, they're sterile, they're impersonal. I dropped my iPad last weekend and made the mistake of nipping into the Apple store on 59th and 5th in New York on Saturday for a new one. A seething mass of humanity, half getting their new iPhone 6, but half for service help, looking for help in person. And I believe the same will be true in retail banking over the next few years. For sure, many people only using chat or online video call centers for help, but others still wanting to come in and talk to a person. The human element in key parts of our physical presence will therefore remain. A warm greeting, somebody who can sit with you and help you make an important decision. And this is particularly critical for those defining moments: buying your first home, or if you're in financial distress, or planning your kids' college education, estate planning. There are still times when humanity is important. Trusted, independent advice, technical expertise help in these decisions. And many people, even the millennials, like a person at the other end of that conversation. The digital world in retail banking plays a key role in making that human interaction focused on where it can add most value. We take our digital document tool in mortgages, where you can upload 20 documents in seconds now. You can track new docs coming in, like appraisals, and monitor your progress towards close. It's a bit like following the Domino's pizza delivery van online. Now, if we didn't have that, our loan officers and sales team would spend their time interacting with the customer on process and not on adding value and building a relationship. And that's what we want them to do. And it's for that reason that half the complimentary letters I get are around our mortgage offering. Because when you help a client buy their dream home, it's a big deal. And when that goes smoothly, wow, you have a relationship for a decade. The danger for banks is that we tend to think of digital as a technology, something that's good to lower costs, to mitigate our rising regulatory requirements and burdens. Now, that's valuable, but it's not nearly as valuable as digital freeing up our talent's time to make customer service remarkable as well. Then, of course, there's digital and mobile channels and whatever else hasn't been invented yet. We're going to be a household name in 5 years. There's multiple change going on. When we look at it, by the end of this year, 2/3 of all of our transactions in the retail bank will be done via ATM or digital channel. Think about that. 2 out of every 3 transactions, even in a largely physical network. So we have to think about how we serve those clients away from the branch, getting paper-based activities eliminated. And as an established player, I sit here worrying about adverse selection. If we are not one of the early movers eliminating checks, we will be the destination for all those clients that are the last to adopt a different payment model. That's costly, and I'm Scottish, and I don't like that. If we don't understand how our customers want to use and move between channels and how that will evolve, we're just going to end up adding cost of multiple channels onto the model versus the benefits of substituting with digital channels. So while the future is omni-channel, it does require changing the way we operate today, our sales, our service, our processes, our controls. In early August, Citi was the first to launch a global bank proprietary wallet, thanks to my colleague Judd Linville, who leads Citi Cards. The wallet stores online checkout information, your name, billing address, card number, expiration date, which is then transmitted to the merchant checkout page. And Citi Wallet was a really great solution developed internally. But we're learning that we don't have to build all these digital solutions ourselves. As a bank, you're kind of used to controlling everything. Again, outdated. We know that we have to collaborate as well as compete. Now, you all know about Apple Pay and how smartphones are becoming much more integrated into our financial lives. That's a perfect example of many different companies and banks from different industries, many of them direct competitors coming together to innovate as one. Some of you in the room may have also heard about the Citi Mobile Challenge in Latin America. This is a virtual competition hosted by Citi that brought together the most talented and creative developers in LATAM to help us create cutting-edge apps and accelerate our innovation in digital banking. Probably saved us a few years. Now, when we ran the challenge in Latin America earlier this year, we had 500 top developers creating solutions for Citi. And the participants came from 50 cities across 19 different countries in the region. And in just 38 days, we had 50 prototypes ready for integration. We're building on that success now by hosting our second challenge here in the US. And we received submissions from 744 teams and 62 countries, 323 cities around the world. And the best of these will showcase their solutions at demo days next week. So do stay tuned. Now, you're probably used to this world, but it's a really big departure from the past for a company like Citi. You know, we still tend to think we have the monopoly on big ideas, and it's clearly the reverse, because we just want to defend the status quo. And if you've spent any time in the corporate world, you'll know it can be a real challenge to find the time and resources to think outside the box and to follow an idea that may seem daft to 90 out of 100 people, but that's where innovation is really born. In the stacks of failed experiments and ideas that aren't just there yet, but they can be with a little help. And that's where we can really change the game. We can combine our strengths and resources as a major global institution on the one hand, with the nimble genius and inspiration of the startup on the other. We can facilitate ideas at their genesis, well before they're ready to take hold as mature products for the market. And at Citi, we can do that all over the globe. Beg, borrowing and stealing from our Asian colleagues or hosting hackathons abroad is not the only benefit for us in the US of Citi's globality. We're in the midst of moving every one of our consumer banks onto the same global platform called Rainbow. Now, there are days in that conversion process that I am thankful for having a glass of Napa's Finest waiting for me at home, because it's quite a challenge, but the ability to operate seamlessly around the globe for a huge percentage of clients is a key part of how we will compete going forward. Be they a small tech business sourcing in Korea or Taiwan, or a family agribusiness tied into Mexico, or some of our Asian clients in Hong Kong or Beijing, Chengdu, whose kids are in New York or the West Coast studying. They need seamless banking across channels, but they also need it seamless across cities and countries. And as a platform on which to take an idea global, it will be unprecedented in our industry. Because that's where the real fun starts. It's not just enough to have the latest tools or apps or even to have the next great idea. You know, that's a great start, but they all have to be consistent and compatible to really scale up. Everything working seamlessly from one platform to the next, everywhere around the world. So in conclusion, we're not there yet in consumer banking. We have a lot to learn from payments. As an established player, we at Citi, we need to play offense as well as defense. We have the opportunity to address some real challenges and some real pain points and turn them into new opportunities and new ways to serve clients. And I don't just mean eliminating checks and the like. We're at the bottom of the rate cycle with a lot of new regulations, and mass market has been break-even at best. Access to credit, access to banking, savings, all of these are really critical to the low and moderate income houses and to the small businesses. We have to provide these responsibly, right? That lesson was learned the hard way. But we do have to provide it for the economy to thrive. Again, we see real advances abroad in using more digital models in the emerging markets, and we can and will learn from these in the US in the low to moderate income space. And I think there's a real win-win here. It's possible, simpler propositions, easier to understand and access, easier to service, and at lower cost. And as a woman who likes to have her cake to eat it but put on no calories, I see opportunities to provide more mass market households and more small business clients with that same win-win and a viable economic model for the provider. We're finding this with our new banking product, an access product, an account. It's simpler, it's digital, it's less cost, the clients love it, the regulators love it. The bottom line is we just have to be better than we have been in the past, but to create our future, not just to chase it as a bank. And so we're challenging ourselves, challenging our assumptions, challenging what we take for granted, challenging what we think we know. The caliber and quality of resources we can deck against these opportunities around the world are quite remarkable, particularly when we collaborate. Regulation does afford some competitive protections as a bank, but as a side product, our control environments make us slower. So as I look at the next 5 years, I know it's not going to be easy to make the transformations that we need to. But it should be fun. It should be exciting. And together, we have such a great opportunity, all of us in this room around the world. You know, it's our legacy to create, to change the retail banking space. Responsible, engaging finance. Thank you very much.